An explosion has rocked about 5 residential buildings along Zomi Street in Sapomba area in Benin City, the Edo State capital. Although no life was lost in the incident, some occupants of the buildings sustained minor injuries. A team from the police anti-bomb squad was mobilized to assess the area. Meanwhile, the Edo State Police Public Relations Officer, Mr. Stanley Osifo, who confirmed this incident to Channels Television via telephone, said that the occupants of the building have been taken in for further questioning. He also said the police have commenced profiling residents in affected areas while investigation continues. Nigeria has reported its worst purchasing manufacturing index since April 2013. Well, that's according to the FBN Quest. In its latest PMI report, the research firm compares the readings of 44.6 in January to 54.2 in December last year. Business News editor Bosun Omofai looks at the numbers in this next report.
The two sets of economic activity measurements released in the past 2 weeks have indicated a decline in Nigeria's manufacturing, business confidence, as well as sales and market growth in the month of January. First, the Sales Managers Index, released on January the 22nd by the London-based World Economics, shows an 11-month decline. The index was reported at 61.3, down from 62.6 in December of 2015. The report shows inflationary pressures intensify due to weaker local currency unit. The World Economics report says the poor SMI was affected by weaker increases in business confidence, market growth, product sales, and new staffing levels. Today, the January Manufacturing Data or Purchasing Managers Index was released by the investment firm FBN Quest. The report shows manufacturing activity down to 44.6 reading against 54.2 last December. Industrial output was at the lowest since April 2013, as the report blamed the slide in oil prices, as well as the crunching ban on more than 3 dozen imported items, as well as the restrictions around foreign exchange sourcing. Nigeria's manufacturing sector contracted by 1.8% year-on-year in the third quarter of 2015, slightly better than the whopping 3.8% negative reading in the second quarter. But as the full 2015 growth figures are anticipated, the conclusion of the latest PMI was not encouraging. It says further poor readings are expected as no substantial remedy can be identified for the foreign exchange shortage in Africa's largest economy. Bosun Omofai, Channels Television News.
Well, Dr. Boniface Chizia now joins me on the news at 10 to illuminate more on the figures that we just heard from Bosun Omofai's a report here. He is, of course, our business editor. What do you make of this latest Purchasing Managers Index, recorded lowest figures since 2013? What do you suppose the forecast will be in the coming months?
Well, I think that it should not be surprising, if it's trending southwards. It's like has been said in that report. It appears to all of us that the reasons are obvious. So you find that we have the challenge of foreign exchange and so on and so forth. So if you begin to look at it and you begin to look ahead, it will take some time before confidence begins to return back to the economy. I think that yes, the new administration has taken some steps in terms of its policy directions. But until we begin to say, for instance, begin to get the budget approved and begin to implement the budget, we'd expect that confidence begin to return. But this economy is we are so vulnerable we're so exposed to the shock from the oil sector that it tends to undermine almost everything within the economy. And so, if, for instance, as has been rumored, if China, now wants to talk to OPEC, and we'll have a rapprochement, and then we can reduce the supply of fuel, which has been the source of the crash in price. If we begin to do that, then there will be a sudden turnaround. So that's the expectation. I think that everyone is certain, including Saudi Arabia. Everybody is certain. I think that Nigeria is particularly vulnerable and exposed because we've not been able to build fiscal buffers, so we've not been able to save anything for rainy days. So the rain is here, and we are all being drenched.
Well, let's look at these figures a little more closer. The manufacturing sector contracted 1.8% year on year and 3.8% in the quarter two of 2015. How can this be reversed? Can it be?
Well, it's going to take some time because the manufacturing sector in this economy has not been one of the favorite sectors in terms of growth and performance within the economy, and that tended to account for the fact that we have a challenge with employment. So you have people who, in the unemployment market is the growth, if you like, the fastest growth sector within the economy. Because what's happened is that in the past we leverage on the extractive sector, so the oil sector, even produce, even where we exported, there was little value addition. And then for you to add value, then you begin to talk of manufacturing. So until you begin to do that, then the sort of employment figures, we're going to begin to see, we'll not have them here within this environment. So we expect that if things begin to improve, we expect that confidence will begin to return, and then things will begin to pick up. But it's not something that will happen overnight.
Interesting. Do you see the budget, though, the budget 2016, as a solution to the declining manufacturing business confidence index?
Well, I think that the budget 2016 has a strong potential to return growth to all sectors of the economy, including the manufacturing sector. The extent that you begin to tackle infrastructure deficits, within the economy, I begin to do that, and we expect that will impact all sectors of the economy, including manufacturing.
What's your final words regarding this latest PMI figures as against the concerns being raised?
Well, I think that the figures were, like I said earlier on, they were largely expected. You don't expect the manufacturing sector, the PMIs measures confidence, within this, the sector. And so there's no way you get sort of confidence, the figures that indicate that you're having confidence when it's not there. So what we expect is that as we going forward, we expect that things begin to happen. We begin to, particularly if we get like I said earlier on, if you have a turnaround in the foreign exchange market, and then things begin to confidence in the economy, this confidence will return across borders. And you begin to see overseas investors begin to come in, portfolio investors begin to come in into this, bringing in their monies into this economy, and then we would expect that there'll be growth in demand, and then there'll be capacity utilization. Manufacturing is doing about 57. On that 60% in terms of capacity utilization now, and so all this would add up. And expect that we have to keep confidence alive, and expect that going down the year that we would expect that will be silver lining, in the dark clouds of our
really do
economy.
hope for that as well.
Yes.
I want to thank you so much indeed, Dr. Boniface Chizie, an economist, for speaking to us on the News at 10.
Thank you for having me. Thank you.
You're watching the News at 10 on Channels Television. Time now for some business stories. And Melinda Kinlami is standing by to take us through.
You first. First Bank.
Welcome to Business News. Total capital inflows into the Nigerian economy falls sharply by 53.53% between 2014 and 2015. A report released this evening by the National Bureau of Statistics shows net capital inflows at $20.75 billion in 2014, but down $9.64 billion in 2015. The NBS report also shows that each quarter in 2015 saw larger annual declines in capital flows than the previous quarter. Now, one of the lowest periods was in the fourth quarter, which had a 43.34% fall from $2.7 billion recorded in the third quarter. However, Lagos State maintains its #1 spot with net capital inflows of $2.73 billion in the third quarter, almost the same size Nigeria receives as investments. Clean up the foreign exchange market and reconsider Naira devaluation. This is the view of Mr. Vincent Nwani, a director at the Lagos Chamber of Commerce and Industry, who was a guest on our breakfast show Business Morning today. He says if the federal government can take these steps, it will boost the nation's economy.
We are asking the CBN to quickly and urgently try and clean up the autonomous market, where they've pushed a whole lot of players into, including stopping sale of FX to the Bureau de Change. We want to see a clear direction in that market, where a lot of people are already playing about $300 Naira per dollar as we speak. We want autonomous money to flow into that market to release the liquidity squeeze in that market, and a high expectation from LCCI and our members and the larger business community is to see the Buhari administration and the CBN consider the inevitable devaluation of the currency.
Public offers in the Africa capital market in 2015 was valued at $12.5 billion, less than 0.5% came from Nigeria. As a downstream oil company, Alcon indicates interest in raising an initial share offering on the local market, but some people have voiced their concern. Our business correspondent Temple Ashaju reports.
In the last 10 years, there has been just one initial public offering, or IPO, in the Nigerian capital market. This lull is attributed to the state of the business and market environment, which is challenged by various factors. Now that the shareholders of a small-cap downstream oil company, Akan Petroleum, take a bold step to explore the IPO option of capital raising, the perspective of some fund managers is rather neutral.
So one is not sure that the primary market will be strong enough to meet the request of an issuer right now. But however, it can actually still be structured considering the new method of raising funds in the primary market.
The assessments are based on the performance of similar exercises executed in recent times.
I don't think they were quite successful in that. You will see that some of them, even when the offers were on, they came to, change the offer terms in terms of, changing the price and all those things. Those are signs that the offers were actually challenged.
Africa's second largest market has been battling with the impact of bleeding crude oil prices on its revenue base for about 2 years. The gloomy direction of the fiscal policies has also put local investors in a wait-and-see position. Temple Ashaju, Channels Television News.
The Nigeria All Share Index bounces back by 0.03%. For the details, here's Bolaji Akinwale.
Welcome to the Stock Market Report. Activities at the Nigeria equities market edged up marginally after blue chip stocks recorded some gains. The benchmark index was up by 0.03% to close at 23,834.87. The appreciation was driven by top gainers Seplat, Dangote Cement and Stanbic IBTC. Seplat closed at 214 Naira 15 kobo. Dangote Cement recorded 128 Naira 1 kobo and Stanbic IBTC was at 14 Naira. On the losers table, 7-Up led, closing at 177 Naira. GlaxoSmithKline followed, closing at 24 Naira 37 kobo, and Nigeria Brewers was at 99 Naira 50 kobo. On the top trade chart, bank stocks made headlines as seen in the volume, pulled by UBA, Sterling Bank and Zenith Bank. At the close of trade, investors traded 309.4 million shares for over 2.4 billion naira in 3,366 deals. That's a wrap on the stock market report. I am Bolaji Akinwale.
Thanks a lot, Bolaji. The global markets was badly hit by falling oil prices. Now let's take a look at the numbers. That will be all on business news. Gimba will be back with the news at 10.
You first. First Bank.
The National Drug Control Master Plan of the National Drug Law Enforcement Agency was drawn up in 2015. It's assigned roles to state and local governments as efforts are being made to reduce cases of drug trafficking and abuse of banned substances. Well, moving on now, and still ahead on the news at 10. The wait for the National Sports Festival continues as hosts Cross River State postponed the event to last quarter of 2016. That's on Sports News. Do stay with us.